Well, another week in the books for Roundhill and for WPAY, which means another update coming to you from the Roger Sands Show. Let's talk today about the bloody week that Roundhill had. And to put it into perspective, the NASDAQ was down 2.67% in the last 5 trading days. I use the NASDAQ because we all know when we look at Roundhill, we're really looking at some of the largest holdings in the NASDAQ: Google, Apple, Tesla, NVIDIA, all of those names, Microsoft as well. And we can see just here from my color chart that it was not a good week for any of these stocks or any of these Roundhill funds. The only one that was up on the week was Google, which was still riding some good news that Berkshire Hathaway was buying Google, and the launch of, I think it's Gemini 3, their kind of AI platform. So I like Google. I mean, we're all on YouTube right now using a Google or Alphabet product. So here we are talking about Google. So that was up. The stock was up 8.41%. The Roundhill Fund up 9%. And the total return, because it threw off a 0.82% dividend, was 9.88%. That's 9.88% for the Roundhill Fund. Now, that was not 120% of Google's return. It was 117%. So Roundhill fell short of their goal of trying to get 120% return of Google, but they still were in the positive, still 117, only 300 basis points away. So not the end of the world there, but when we look at some of these other funds, you might have a different opinion. So looking at the worst performer, AMD was down 17.43%. Remember, we're using a Roundhill week, which is last Friday to this Friday. So the stock AMD, you'll see down 16% if you just look at a Google chart, but 17% if you use the Roundhill week. The Roundhill Fund for AMDW was down 22% on the week. Let's actually just pull that up, not for fun, but AMDW, just to see 20% on the 5-day chart. So huge decline there. With the 1.48% dividend that they paid out, the total return was only down 20%, but a huge decline for that fund. And actually, let's take a look at, on the Roundhill website, what the NAV of this fund is. So this is down to 60 million in AUM, that fund. So that's definitely not good for them. But let's get some averages here now that we've gone over the winners and losers. They're the highest and the lowest there. Also, you'll notice I've got some charts off to the right. We're going to get into those towards the end, but let's take the average return first of the stocks. And this should be in the negative quite a bit. Yep, down 6.38%. The number of winners, I can visually see it. We've only got one in the green, which means one winner and 14 losers. Roundhill average price return. So if you're just owning these Roundhill products and you're keeping the dividend and you're not reinvesting, maybe you only care about the price return, that's down 8.73%. So much more. The total return, perhaps you are reinvesting and you care about the total return. Total return down 7.78%. Also bad. And then the average distribution, I think it's going to be around 1%. It usually is, let's see, 0.95%. Okay. And winners, only 1, and losers, 14. So it matched it perfectly. So that's all the individual components, all the 15 individual components. If you look at WPAY itself, the price return, and this is going to be measuring Monday to Friday, but it is down 7%. But if we did a true Roundhill week and we did the 14th, it would be down 5.54%. So significant difference there, but again, not too important because people aren't trading in and out of this, or unlikely that they are. The yield, let's take a look at the yield. How much did WPAY throw off this week in distribution? Looks like it's going to be less. So 39 cents. Last week it was 57, before that 56, before that 62, 73. So this looks like it's the smallest distribution paid so far. I don't have any context on why that would be, other than just the stocks going down maybe had an effect, but there should have been more volatility accounted for there. So 39 cents, 0.84% yield there. And so total return down 6.23% for WPAY. So, you did better if you held WPAY than all of these, and that's probably because WPAY has an equal weighting and they hold some cash as well. So in this case, might have made sense to hold WPAY. I still think that the best way to approach this, if you're going to buy into it, not that I'm recommending it, but if I were going to buy into it, the best way to approach this, if you believe in these total return swaps, would be pick the ones that you like and jettison the ones that you don't like, particularly crypto, MSTR and coin. Those would be ones that if I were buying into now, I probably wouldn't buy. And even if you were worried about all the AI hype and the AI bubble, you could remove AMD and you could remove NVIDIA and Broadcom, and you could really just have a more stable portfolio. I mean, if we look at WPAY, they've got some more stable names in there. This one, Berkshire, but they've got Costco, which WPAY doesn't hold yet. This is a Costco one, a GDX one, and a GLD one. By the way, if you watch my Ulti videos, you'll know that Ulti has bought Costco, they've bought GDX, and they've bought GLW. They've also bought Meta and Google, so Ulti's kind of starting to resemble WPAY. TSYW is a treasury bond weekly pay ETF. It's a 20-year treasury, the iShare treasury, which is also held by Ulti. So Ulti is copying Roundhill, or Roundhill copied Ulti. I don't know who copied who, but yeah, if you look at this suite, Ulti has a 20-year treasury in there. They've got Google, they've got GLD, they've got the GDX, the Gold Miners Index, and they've got Costco and Meta. So all recent acquisitions. So Ulti is looking similar to WPAY. It'll be interesting to set these two horses against each other later. I know a lot of people tell me, oh, you can't compare WPAY and Ulti, which I call BS on. I think I can compare whatever I want. I know it's not apples to apples, but they're still fruits. They still both pay dividends. And if you're evaluating ETFs to generate income, it's totally fair to evaluate one that uses an option strategy against one that uses a total return swap strategy. I don't know why you wouldn't compare them together just because they're not the same. Anyways, we were talking about which did better. In all cases, except for Google, the stock did better. The stock had a better return. So that's what we're seeing when it's very negative, or when the stocks are down, that Roundhill is down much further. 120% goal, who reached it? Let's see. Broadcom, AVGO, was down 0.66%. The Roundhill Fund was down 2.33%. And with the dividend included, Broadcom was down 1.28%. So 193% of the return of the stock. That just seems crazy. Let's take a look at AVGO on the week, down 0.07, and then AVGW down 2.83%. So they really did something wrong there. I don't know what happened there, but that's much worse. Same story with Berkshire there. Like Berkshire down, you call it 1%, and an extra 74 basis points there of negative return for the Roundhill Fund. So interesting to see that the Roundhill funds are far exceeding to the negative, to the downside here. And that's kind of where I want to bring in these charts here. It might be a little bit blurry, but you'll see that on the left we've got the Apple Roundhill Fund, and on the right we've got Apple stock. And this is since inception of the Roundhill Fund. So back in February of this year, this is one of the oldest Roundhill funds. That's why I chose it. And the total return with dividends reinvested has been 5.7%, according to Dividend Channel. I use this website, and you just plug it in here. According to Dividend Channel, total return 5.7%, and Apple's been positive. The total return of Apple has been 8.67%. So even though Apple's been positive here, Roundhill has not beaten it and not even, matched it. Still positive, so they got the direction right, but to the negative there. Now let's take a look at one of the better performing Roundhill funds and stocks this year, which is Palantir and PLTW. On the left, we've got the Roundhill. On the right, in the blue, we've got Palantir. And we see that the Roundhill won 48.96% versus 51% for Palantir. When you put it on this chart, it's so close and it's far off, so like 2 to 3 percentage points there. But even there, we see I guess I'm looking at the annualized gain, but even the total return, we see Roundhill is not meeting their goal of 120%, although their goal is truly 120% of the calendar week returns. So to be fair, this isn't a calendar week. This is many calendar weeks. It's each individual calendar week, but it's not working out. And that's kind of why I haven't invested yet in WPAY or these Roundhill funds. I don't trust it yet to actually recover enough when things are down. So, but yeah, in dividends without reinvesting at the bottom here, you see that those are the numbers there. So if you wanted to get total return out of the investment, it looks like dividends. But if you're just looking for income, then you wouldn't be reinvesting. So anyways, guys, those are the charts. Fun to play around with that. Dividend Channel is the website if you ever want to look at that stuff and do your own due diligence, as I always encourage people to do. So thanks for watching. Have a great weekend and see you in the next video.